Okay, section 1.4, tax and other pay deductions. So, tax is money collected by the government, in our particular case from Australian residents. Sometimes they're not, actually are they? No, it's only from Australian residents. And it's used to fund lots of things. So, income tax is a federal government collects income tax by having employers withhold a certain amount from each employee every time they're paid, usually fortnightly or monthly, but never 3 weekly. We don't ever get paid 3 weekly for some reason. Who knows? It's known as the pay-as-you-go system, and the amount of tax withheld depends on your income. So, pay-as-you-go, income and amount dependent. Oops, I'll redo that one. So the tax table for, okay, so on page 22, it has a tax table there. It's for the year ending 2013, or 30th of June 2013, which, you know, as far as the book's concerned, that's what we're going to be using when it's asking a question about that. In, you know, whatever, if you are given any sort of tests or anything, if there's a question of that, you will also be provided with a table if it's required. So you can see there's different pay brackets there, and it changes from year to year, depending on how much the government wants to be re-elected. Tax deductions are tax deductions. So if you spend something that helps you earn your income, something to do with your business, or some things are allowed, some things are not, they're all listed. And it can be listed as a tax deduction, which helps reduce your taxable income. Reduces taxable income. It does reduce your income a little bit. That's not to say that a deduction, or something that is tax deductible, you don't get that money back, you simply don't pay any tax on that amount. So, for example, if you paid $10 to ADRA, that is a tax deductible amount. Doesn't mean that the government will give you $10 back, it'll simply give you the amount of tax you paid on that $10, which, depending on your income, let's just say it was 20% or something like that, so then they might give you back $2. Something like that. In Australia we have what's called, so it's also, I'll just put this down, where calculated the taxable income is calculated by your gross income minus deductions. Then the Medicare levy is something that we all have to pay. It's now at 2%. Let's type it in, Medicare levy. 2% of your taxable income. It was 1.5%, but it got changed to 2% to help pay for the National Disability Insurance Scheme, but that's not really relevant. And it's deducted from any tax refund owed. Interesting. Other deductions. So, apart from income tax, other deductions from an employer's pay must be agreed to in writing by an employee, unless, it doesn't really matter. Superannuation is pretty important. And what that is, commonly known as super, it's a way of saving money for retirement. Employers are required to regularly pay a percentage of the employee's earnings into an account or fund. So, compul payment of percentage of employees' income. How did I misspelled compulsory? Of course I have. Income into an account or fund of the employee's choosing. It can't just be a bank account though. If you're self-managing, then that's other things. It's rather complicated, but that's fine. It was 9%, but it's now, it's going to be, so it's 9% it's actually 10% at the moment. In 2012 it was increased from 9% to, it has to be 12% by 2019, so I'm assuming it'll be something between those two numbers that they made. So let's just go with 12% of income. It's the gross income, so it's the pre-tax income. It's it's also made in addition to the salary. So say if you're on $60,000 per annum, then that would be $60,000 plus your superannuation that the employer has to pay. So as a summary of sorts, your net income is equal to your gross income minus any tax plus any voluntary super contributions plus any authorised deductions. Which and that will give you your net income. Boom. Okay. So our first worked example is example, my pen out, here we go. Example 12. And it is asking us to calculate A, the annual income tax, and B, the annual net income for an annual gross income of $68,000. Assume there were no other pay deductions to be made, and we're going to be using the table on the opposite page on page 22. Okay, so we have $68,000, and so we're going to firstly calculate, well, it's telling us that we have to use the, if we've earned $68,000, we're going to fall under between the $37,000 and $1 and $80,000 tax bracket range. You can see it on the table on page 22. So what that's telling us straight away is that we're going to have to pay $3,572 in tax, plus 32.5 cents for every dollar over 37,000. So to calculate how many dollars over 37,000 we're going to have to pay, it's pretty simple. We'll just do a quick calculation of over here of 68,000 minus 37,000, which happens to equal $31,000. So, a bit of working over there. That means it's going to be $3,572 plus 0.325, because it's 32.5 cents for every dollar over 37,000 that we earn, which is $31,000. So times 31,000. And that, once we've calculated that, will be the total amount of tax we'll have to pay. So we'll just add that up. That's going to be 3,572 plus whatever this is, which is $10,075, which adds up to be total of $13,647 in tax. Good times. That's what you get to pay the government. Now this was part A. Part B of the question was asking us what? The annual net income for an annual gross income of that. So, which was asking us how much is the person actually getting after the tax is taken into account. So that would be 68,000 minus 13,647, which would give us 54,353 dollars. Okay, so work example 13. Calculate the tax. Oh, this is on page 23. I should write that, shouldn't I? Let's try. Page 23. Calculate the tax that is deducted each pay and the net income each pay for a gross income of $980 paid fortnightly. Assume there are no other deductions. Assume that no other deductions are made. And assume there are 26 fortnights in a year, which is fortunate because there almost always are. So, part A, we're going to work out, if we know that it's $980 a fortnight, and there are 26 fortnights in a year, we can work out what the annual gross income is. $980 times 26 weeks would give us a total of $25,480. This is my gross income, so the income that I've earned before tax. With that amount, I can then see which tax bracket I'm going to fall under, and I'm going to fall under the 18,201 to 30. It's basically the first tax bracket. Everything less than $18,200 isn't taxable, so that's tax-free, and then I only have to pay tax on every dollar earned above that amount. So to figure out what my taxable income is, then I'll just need to subtract $18,200 away from the $25,480. So for taxable income, we'll go 25,480 minus 18,200, and that's going to give me a taxable income of 7,280. So with that taxable income, now I can work out how much tax I have to pay, which would simply be 19 cents for every one of these dollars. So this times 19 cents is going to be how much tax I have to pay. So, just delete that. So 7,280 times, oh, I've done it again. I don't want to do that. I want to say total tax, annual tax payable. Is $7,280 times 0.19 cents, which would happen to be 1,383. Horrible 3.2. So $1,383.20. So that is how much tax I'm going to pay on the entire year, but the question was asking how much tax would be deducted every pay. So to work out, assuming I get paid fortnightly, how much tax I'm going to pay per fortnight. So I'll simply divide that, so per fortnight tax, simply divide that 1,383.2 divided by 26, so that's how many fortnights there are, and that would give me $53.20. So that's how much tax I'm going to be paying per fortnight. Part B of the question was asking the net income for each pay. So I know how much tax I'm going to pay a fortnight, so my net income is my gross income minus tax. So for part B, my net income is simply the $980 minus 20, which gives us a grand total of $926.80. And that is the net income each pay. That's how much you'd actually get in your bank account. And that's how much your workplace would have to hold and give to the government. And likely you wouldn't get any back. Maybe you would. Depends. Okay, so worked example 14. Oh, got the pen going. We have Kerry is an engineer whose annual gross salary is $95,000. During the year, she had work-related expenses totaling $1,200, paid membership fees to Engineers Australia of $225, and donated $650 to the Red Cross. So all you really need to take note of here is the numbers. Like, obviously. So she's earned $95,000, and then these numbers, other numbers, are mentioned because those things are going to be tax deductible. So her taxable income is going to be how much she earned minus those amounts. So we're going to work out taxable and that's going to be 95,000. I'm going to try and draw a little neater. Minus the $1,200 for the work-related expenses. Minus the, and I'm going plus because we've opened up a bracket here, $225 for Engineers Australia, and $650 for the Red Cross. So that's going to be $95,000 minus 2,105. So then the taxable income, actually we can just go equals. The taxable income then is $92,895. I wrote 59, but I meant 95. Great. So that's part. Oh, yeah. So part A was calculate Carrie's taxable income. Part B is calculate how much income tax Carrie should have paid using the table on page 22. So we're currently on page 24, and we're going to be using that table that I mentioned earlier. Again, like the table will be provided if you're getting to do this. So $92,895. This is going to fall in the the $80,001 to $180,000 tax bracket, which tells us how much tax you'll have to pay for all the previous brackets, which is $17,547 plus 37 cents for every dollar over 80,000. So let's calculate how much is going to pay for every dollar over 80,000 first, which is going to be 92,895 minus 80,000, and that is, let's have a look, 12,800. Nope, yep, and 95. So that's the kind of part of the taxable income that we're going to add on to the the tax that she's already going to have to pay, which is the 17,000 for all of the previous tax brackets. But we're just working out sort of for this kind of tax bracket at the moment. So, how much does she have to pay on that 12? She has to pay 37 cents for every dollar on that. So 0.37 times 12,895 gives us 4,771.15. Great. So that's how much tax is paying that, plus total tax is the 4,771.15. Plus, from the table, we grab the $17,547 mark, which gives us a total tax of $22,318.15. QED. Okay. And we're done for now, and I can't believe this video has gone for 18 minutes, so that's not good.